Moneyweb now. On the money.
This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. I'm chatting with Mark Salmon, Head of Special Situations Fund at Differential Capital. Mark, appreciate the time. A couple of weeks ago, we were chatting around the business rescue Group 5. Marion Roberts for the True Stories. We're chatting there with Worksman's attorneys. You were on the one side of the deal. Cementation Africa, part of Marion Roberts. You got them out of business rescue, 1.27 billion, about 2,000 jobs. The thing here, it wasn't so much the business. This was a good business. It was a capital structure that just had simply too much debt, and you spotted an opportunity.
Yeah, Simon, thank you. That's exactly right. The two mining services businesses within Marion Roberts, in fact, there were three operating in South Africa, South America, and North America, were and are still very, very good businesses, and invariably had been perhaps capital starved by their parent for a number of years, and therefore weren't performing to their potential, but still were solvent and able to continue operating. And so I guess that's the beauty of the business rescue process. It was able to protect those businesses, provide them support to keep operating throughout the business rescue process. And while that was going on, we were negotiating with the business rescue practitioners to acquire those businesses from Marion Roberts and its other subsidiaries out of the business rescue process.
And as I understand, you actually bought some of that debt, which effectively gave you a seat at the table at the same time. Was that an important part of the process?
Yeah, look, I think it's a vital part of the process because it gives you a seat at the table, as you said. And at the same time, it was necessary for us in order to provide what's called post-commencement funding into the business rescue process. So you can imagine when the group or business goes into business rescue, it goes in because it doesn't have liquidity. So someone needs to provide that liquidity. And that was a role that we played as well. So part of our approach to this was buying the bank debt to make sure that we had a seat at the creditors' table, and then providing what's called the post-commencement funding to the business rescue practitioners to enable them to function and keep supporting those parts of the business that could still be supported. And one of those parts invariably was the cementation businesses that we bought.
I want to touch on funding. Before I do, I want to get due diligence because, I mean, the challenge here, you can do the due diligence. You can go kick the tires and everything, but you're not going to get any warranties, I imagine, because of that business rescue environment, which means your due diligence suddenly has to go up a level because of that lack of warranties.
Yeah, that's exactly right. And in fact, that's why the whole process took as long as it did. You'll recall Marion Roberts went into business rescue, I think, in November or December 2024.
Yeah.
So it's been the best part of 18 months, right, until this transaction ultimately closed. You know, you're 100% right. The business rescue practitioners can't give you any warranties because if they do and they're called upon, in theory, the creditors will end up getting nothing. And therefore, why would they vote in favor of the plan? And that means you've got to do a very, very thorough due diligence. And that's ultimately what we did. And it was complicated by the fact that this was a multi-jurisdictional transaction. We were acquiring businesses or legal entities in Chile, Portugal, Australia, South Africa, and Canada. So, you know, it was a lot of work for a lot of consultants over a long period of time.
I hadn't realized it was that expensive because you mentioned up front, I mean, Cementation Africa, I mean, they are a real player in mining across the continent, but seemingly broader than that as well. And to the point, it wasn't a bad business, it was a bad capital structure, perhaps.
That's exactly right. And that's where we saw the opportunity. Good business stuck in a poor capital structure or a distressed capital structure. And it's actually thanks to the business rescue process and I guess the business rescue practitioners as well that, you know, we were able to save those businesses. And that's really, really good news for us. We've got a business that we think has got great prospects. We've bought it at a good price. Jobs have been saved. So those parts of the Marion Roberts group that could be saved ultimately have been saved as a result of this.
And funding, as I understand, it was a listed hybrid preference share that you've used as part of the funding?
Yes, that's right. So look, given the state of the business rescue process itself, to use any debt funding was just not going to work, right, as you can invariably understand. So it was necessary for us to finance this with equity funding, and we were able to use quite a unique structure that was put together by consultants we worked with called Differential Capital, whereby our clients came into the investment through a preference share that's listed on the JSE, through an entity called the Summit Issuer.
Gotcha. And now it's a case of, I mean, what now? You now have the operation. It's sitting within the broader Differential Capital. You run some hedge funds. I've chatted with some of your colleagues before, a lot of data analysis and the like. I mean, do you hang on to it? Is there a listing in time? Are you a long-term holder? What's the thinking about the future?
Look, we are long-term investors in this, and we put together a specific consortium to execute these transactions. And those investors who are behind that are They are pension funds, very patient capital. So we're not under any pressure to, let's say, de-invest or disinvest at any point in time. That said, the market for this sort of services has turned very, very sharply upwards over the last, let's say, 18 months to a year.
Yeah.
You're seeing commodity shortages in many parts of the world. There's definitely an angle around resource nationalism, which works in favor of these sorts of businesses. So there's lots of work out there. The order books are looking as good as they ever have. And so, one thing we are exploring, and it's probably going to happen quicker than if it does happen, it'll happen quicker than we initially anticipated, is bringing this combined entity or this new entity back to market within the next year to 18 months. And by that, I mean a listing.
Yeah. And importantly, your speciality is not in digging holes across the continent for commodities. You put management in. You're their shareholder 100%. And you put the expert management in.
Exactly right. We know what we don't know, and we know we don't know that much about digging holes, as you say. Mm-hmm. But we really back the management team that came with the businesses that we bought. We've actually appointed the CEO and the CFO of the South African entity as effectively the group CFO and the group CEO. And we're going to look to them to take this business forward. That includes working together closely with the other parts of the group in the other geographies to see what synergies we can extract, how they can work better together, how they can approach clients more efficiently and more effectively. So we think there's lots of opportunity there, just internally, let alone where we lie in terms of the overall market.
You are ahead, I said in the intro, Special Situations Fund. I can see how this is not the normal sort of, you went off to market and picked up a position in a listed business. Is this the sort of, size and scale that you're looking for? Or is this a standout even for yourselves?
I think it's fair to say this is a standout even for ourselves. We would generally be slightly smaller, but, it's nice to do a big deal, especially one that we think is going to generate as much value as we believe this will.
Yeah. Well, leave it there. It's Mark Salmon, head of Special Situations Fund, Differential Capital. Appreciate the time. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions.